Okay, let's start in the relatively calm commodity markets compared to stocks and some of the currencies and interest rates. But even there, we're seeing this continuation of sell-off of commodities as global recession starts to kick in. You got oil, even wheat, coal, iron ore, natural gas, copper, gold, everything getting absolutely smashed as cash is king. And then we've got the UK, who had their budget on Friday, what they called a mini budget. Wasn't so mini in that they announced tax cuts at the higher end of the scale, and also on companies, and a huge amount of borrowing to try and spend their way out of the coming recession. And as everybody knows, spending is inflationary. The UK is already running inflation around 10%. 9.9 was the last official print, but it's probably closer to maybe 11 or 12. And they want to spend kind of crazy. And so accordingly, the interest rates are going to be going up. And as you can see here on the chart in front of you, this is the UK 10-year bonds, and that is the largest move on record. Well, since records started, at least. Yeah, and the market didn't like what the new government is doing. But we can see that the stock market sold off, and across borders to pretty much everywhere where you see the US dollar also gaining a lot of favour in this safe haven flow. The yen also starting to pick up some as well. We can see the market just opened literally 2 minutes ago, and already it's continuing to sell off on the pound. It's a little difficult to trade out here, where you've got such aggressive moves. Everything's oversold or overbought. You're at the kind of extremities. Yen maybe not so much, but but you're still at this and miles away from the moving average. Plus, the Bank of Japan have drawn a line in the sand at 145, which it went and tested on Thursday, that Super Thursday. So I find it difficult to trade out here. I prefer to trade when the market's back at the moving average. Trading out here is lower probability trading, because it could go either way from here. Whereas when you're back at the moving average and there's a trend on, it's a higher probability that the market will go back in the trend. So out here, it's closer. The further you get away from the moving averages, the closer you are to the market having that pullback, and it will. Excuse me. It will have a pullback. It's just a matter of when. So I find it difficult to trade out here. Over in stocks, I note that the market might try and have a little relief rally as it's found a bit of support from the June lows, and that includes the FTSE over here. You've got the Aussie market, you've got the US, the big sort of index, the 500. Nasdaq getting there as well. The DAX has gone through its floor, but it'll follow suit. It won't go out on its own and continuing to sell off. So there might be a bit of a bounce in stocks and come back and fill some gaps in. So looking at stocks, you might come back up here to sort of the 39 area for S&P 500, and for the Aussie it's around sort of 67 area. And similar in currencies, you get moves like this. It doesn't go on forever. It might get another day or two of selling before you see a retracement and the Aussie back up to that 67 level. You might see the euro back up at maybe not quite parity, but certainly around the 99 handle. And the pound, well, the pound has never been this low since 1985. Right, so if we go and have a look, I'll just bring the pound up here. You have to go 1985. Might have to go to weekly or monthly to get it. Yeah, January 1985 was the last time the pound was down here at 106, and that's going all the way back into the 70s. And that's where the pound is, right? So that budget that they released on Friday was pretty terrible, quite unbelievable that they're going back to the kind of Thatcher era of economics, and the price is going back to where it was when back when Thatcher was in power. So 106, this handle. Certainly under threat, 1985, and I think it'll go through that. Maybe not today, but certainly over the coming weeks it will. Kind of tricky, guys. I'd be careful out here and be patient, looking for opportunities. You might find better opportunities in some of the crosses. What you want to be looking at is understanding, okay, so this is a seller's market. This is a buyer's market. You want to be buying yen and you want to be buying dollar, but it's buying these ones against a weaker currency such as the euro, such as the pound, and even the Aussie dollar, because we're so far behind the curve with Phil Lowe saying, oh, we're going to start slowing down the rate of interest rate hikes, and the commodity market's getting slammed. So you want to be selling the Aussie dollar, you want to be selling the CAD, the loonie, and you probably don't want to trade those two. So selling these three and buying these two, and then therefore it's just a matter of finding those opportunities when they appear, but it's a little difficult when you're all at the extremities. Alright, well, best of luck, and we will see you tomorrow.